Okay, now it's working. So the topic of today's discussion will the big five tech giants take over financial services and how should fintech compete. So I think we can start that now, and let me ask the first question to you. Will the big five tech giants really go into financial services? Because Apple and Amazon are already there, really, because Apple Pay, Amazon Payments, but so far only 13% of iPhone users activated Apple Pay, so there's still a long way to go. And what about other four companies? Will they follow Apple's lead? What do you think about it?
I'm the first one, yeah, because I hold the mic right. Okay, so basically we all remember how it started. So basically e-commerce for Amazon or search engine for Google or any other like infrastructure, hardware for Microsoft software. So basically, and they started from a certain specialty, yeah? But now it's a time for building ecosystems. And this is not the question if they enter the financial services market or financial services because, as you said, they are already there. And this is the question of how they will build the partnerships and what areas they will cover. We know that it's navigation, it's localization, it's communication services, it's even advertising business for Google, for Facebook, and of course they are active in payments or payment-related services, which is of course advertising or shopping. And in the case of Facebook or Google, this is a core or one of the core business for Facebook, that's for sure. So basically, if we're talking about the partnerships, so and maybe I will just say something in advance that they can build the partnerships with traditional partners like incumbents, but also with fintechs or any other techs. Because you said techs, yeah, and everybody's in the technology related in the tech business. We have fintech, insurtech, marktech, retail tech. And maybe to sum up the first question, so basically if you are talking about the disruptors and innovation who can bring something new to the table, so probably in the financial services, in the payment area, there will be some players out of this industry, outside of this industry. Look at the retail, for example, at retail tech. There is a lot of going on there. And even Facebook, even Amazon, first of all, is an example of a merchant-driven services and a merchant who builds their own payment ecosystem. And we have more and more examples of such approach. Look at Netflix or even G2A, the Polish gaming platform, who entered the payment industry and builds own digital wallets and also payment aggregation services. So I think this is not the question of the tax itself, but tech-related businesses, and that concerns all the areas and all the industries across the world, I guess.
I think one of the most important part we have to go to that, try to open it up, is the definition of where the financial services starts. Because if you just want to call or pay and then say that that goes to the financial service, that really narrows down the conversation regarding where we want to go in the financial services. So I would say maybe the core business of all big giants, as we want to call them, they are all financial services, but might not be the way that we used to know them. Because unfortunately, still when we're talking about financial services, people remember banks and try to go there and try to take your money or put your money back in the bank. But financial service is far beyond it. So as you also mentioned, like if you're trying to talk about the retail, and it was like when Amazon is going to start doing the retail, I mean, we just have to go back and try to redefine the question from the beginning. So I would say the definitions are changing, and that is the problem that I also remember there was a big conversation about even the idea of changing the name of fintech, because right now it's so broad that people can put basically everything in the word of fintech. So if we can try to go rather not into the details of that, but rather try to come back to the core and try to understand like where fintech starts, where financial services end, and then we can discuss who is in it and who is outside of it. And I'm sure you know, like more guys, they have more background in the financial service, but I'm just trying to put it in this way, that the words doesn't matter. When we don't know exactly what we are defining and how we are defining it, when we think somebody is inside a business or not, everything would change by definition. So maybe you guys want to just add some more information.
Okay, so the first thing is that doomsday prophets are here forever. So in 2015 we're talking if fintech will kill the banks. Now we have 5 tech giants taking over our business, but hey, we are still here and we won't move anywhere. That was very true that fintech is a buzzword and financial services is a buzzword. We are only talking about retail payments, consumer payments, while banking is so much beyond that. We have corporate banking, we have partnerships with retailers. It's a huge business, and it's not very sexy on the backstage. It's loads of data, loads of processing, loads of know-how that Google, Amazon, or other tech company just doesn't like. And we will be there. It's up to us what we will be doing. Like PSD2, we can be only a back office provider if we won't do anything, and everybody will be paying with Apple, Google, Android Pay, anything else. But we have know-how, we have people, we have will to be on the market. And the market is growing, it's not shrinking. More players, more competition is better for our clients, yes? So we need to put an effort to do something plus, but I don't believe it's a huge danger for the industry. Maybe, Oli?
Yeah, the one part that I'm looking at particularly is I'm calling social banking. So the P2P payments is one of them. If Facebook introduces P2P payments, that they've got 6 million users in Poland, so that might be some kind of significant part of a cake, but still they will rather take the part that is now happening outside of the banks, cash handling and so on. Yeah, I rather agree that the Facebooks of this world are good at conducting their business as platforms, so they will rather integrating the services, for instance, banks or other services into their constellation of services. And that's how, if they do that, we will still have more to do, because they will bring more volume to us. It's just kidding.
The first question is, why would the fat guys do that? Why would they try to enter, even consumer finance? Because as for now, if you compare how much these guys earn on some other services versus what they would earn on very competitive markets in consumer finance, that's a nonsense. They would rather do that for gathering data. That's the only thing. I remember I met Anya some 16 years ago. There was a project. Yeah. Because that was very similar. We managed to gather the 3 mobile operators and the 3 major banks here in Poland, and we tried to set up a consortium of those guys to introduce some mobile payments. But that was, for me personally, a clash of 2 worlds. The first world was the mobile operators. At that time, their margins were like 50%, 30%, something like that. And the banks, like 3 up to 5%. That was a huge clash of expectations and so on. So if those 5 fat guys would ever enter the market, definitely it's not to it's not just to disrupt the consumer finance market, it's just to gather data. But then keep your, let's say, pockets safe.
So finally, I think, first of all, I'm an entrepreneur, so I'm very happy to hear that banking people think nothing will change or there is no threat. Great, because I think I cannot say whether these 5 tech giants will go there, but I can say 80 to 90% of the banks and insurance companies will perish in the next 10 to 15 years. Because they just don't understand what innovation is, what they need to do. So, and I actually have been, talking with many banks, I've sold to banks, And I think what would happen, that's my guess, I don't think the tech giants will go into the banking sector, and I agree with you, actually. They have no reasons to do that. They will collect the data. But a lot of new startups, like I was talking to one company in Estonia, and they are a community bank. It's the first European community bank. And I'm sure, I spoke with the founders, they will do that very well. So I think what would happen in the next 5 to 10 years, a new startups would come up, who would solve the problem of the different what banks are doing, and the tech giants would actually, they will use the data from Facebook and the Googles and things like that. And maybe Google will acquire them, I mean, that's their thing, but it will not be, Google will be doing that. So that's what I really believe.
And maybe just 2 words that should convince everybody that it's better to have your financial with the bank rather than tech giant is banking secrecy. Because privacy is the key. Everybody said that tech giants will gather data. Do you want that your friends on Facebook will know about every spending you do? Or how much money you have? Or it's their business, data is their business. Our bank is, our business is banking and secrecy. We have the most restrictive rules regarding banking secrecy in the Europe and probably in the world. Our colleagues from different countries didn't understand that, but we are really keeping the whole Polish banking industry, really keeping the customer data safe. So this is the...
Okay, Michał, I can agree with you on one hand, because I'm also coming from this banking industry, and we all know about the trust, and basically we talk about the assets that banks have. This is trust, and this is customer base as well. And what fintechs or anytechs have, this is innovation, this is technology. But on the other hand, I've recently seen the survey of the US research company comparing the trust at techs and with the trust that young generation have regarding the traditional banks. So we have such names like Wells Fargo, JP Morgan Chase, Citibank, and Bank of America. And basically the trust on average is between 30 to 40% in comparison to 70% on the tech side, and it was PayPal. Of course, this is more payment related company, but still. And then they also quoted Google, Amazon, and Facebook. So it's like twice as much as trust on the bank side. Of course, we are talking about US young generation millennials. But we have to take this also into mind. So there are some people who would like to transact to bank to pay using the social media or using any other innovators or disruptors or challengers banks, neobanks or challengers banks. This is another example of the companies who enter this market, and basically they have the trust of the users because they use it anyways. So, and once again, to make it clear, so first of all, we are not talking about threat anymore, because this Sebastian, he gave us a brilliant example from the past when telcos were considered as the cutting edge technology and the innovators, and basically everybody wanted to establish new ventures with telcos. And so the mobile payments was an example. And they also wanted, apart from data, a small piece in the value chain, of course, in the transaction value chain. Anyways, but what happened, of course, banks are banks and financial services, and telcos are, because there is no successful model in the Polish market of the bank and telcos or telco just driven banking services. But anyways, so once again, this is not a threat, this is rather collaboration and cooperation model, building the ecosystem, and also just putting into this ecosystem other partners than even, you know, just financial services or tech. So retail is a good example. And just to conclude, the recent and very up-to-date information from, I don't know, from yesterday or 2 days ago. So Visa investment in Klarna, which shows, you know, just how we can build the financial services and payment ecosystem. What they have almost everything. They have credit cards, consumer finance, merchants, e-commerce, issuing, acquiring, banking license, I don't know what else, for sure much more else, because they are just starting this venture.
I'll just quickly respond to 2 points. One is the trust level. Actually, I have dealt with banks like KBC, ING, and they don't even want to put their names in front of when they launch something consumer because they know people don't trust banks. That's number one. And the second thing is about privacy, which I think all the speakers also said, and I also said that the privacy people are willing to share the data if they get something in return, and that we have seen in Belgium. So because I had a startup in Belgium, people are very happy to share the data. So what banks also don't understand often, that they don't understand that they have to return something in value. Banks still have this corporate mindset, and they think, okay, we'll keep the data and we'll not share. So startups understand that very well. They understand that I have to give you something in return if you share me your data. That's why I really, really believe that disruption cannot happen from existing banks and things. Disruption will come from outside the environment, and many banks will perhaps not survive.
I just feel like we're just, again, going back to definitions. It's branding, not the trust. It's the idea that names of the bank somehow is associated with so many negativity that is around it. But again, we have to also define different stories. Soft part of banking and hard part of the banking. The technology part and the policy making part. How many startups do we know that they are changing the policy makings in the banking system? How many of them, when we're trying to talk about the trust, how many of them are really trying to support big corporations and big organizations? How many startups can somehow try to finance Facebook? Who is the startup that Facebook would trust them to give their money to that startup? Because if Facebook would do that, then we're not going to talk about going to fight with those people. Then we're going to talk about the idea that one big giant can just make it a smaller startup, another bank of the future, just because they have all the money and they can shift it into one small company. So the problem is that we have shadow banking, happened after the whole crisis and everything, still does exist. We have money and we have bank. Sometimes when we are attacking banks, we're just attacking money. Sometimes when we say this is the end of banking, we mean the end of the money. Sometimes when we're attacking a bank, this is not even a bank, that's a shadow banking. So we have a problem even knowing where we're attacking, and that's the real problem that we have to understand at least where we're pointing, and then everything is fixed. One of the biggest challenges startups always don't have money. I mean, that's what the first thing, just ask one of the startups and say, we don't need money, That would be a unicorn. And that is the problem that the banks usually don't have. That is the reason the banks have lots of people that they are just there in order to do risk assessment, risk management. And if we say that the bank hire 50 people and they are all going for the risk of the bank and none of them are really looking for what is really bothering the whole brand and the future of the bank, then yes, those banks, I think even already they should be bankrupt by now. But I don't think that they are the banks that we are trying to discuss. If you're talking about the banks that they're successful, I can't say that they really know where they're going. But the difference is, also remember, it was a one conference, it was in Geneva. There were some guys from the some international banks and policymakers in the EU, and then one startup came and it was I think all of you are stupid, right in their face. The guy is plus 60 and because all of you are going to die, and cryptocurrency is going to survive, and then, that's good, but this is not a revolution, the insurgency is not about the idea in order to assassinate somebody on the stage just by saying some words that, it takes 2 months to come back and answer. I think the real problem is whatever the banks wants to do, they have to be according to regulation, and what the startups want to do, even if they're not according to regulation but sounds good, it will happen later. What happened in Estonia is because of Estonia. This community, if it wants to happen in another country, that the society wouldn't really just had a reason to be closer to each other, then that community banking would never work because they are basically using a very good infrastructure. So if startups can make infrastructure, I'm sure either banks can hire them or acquire them or at least learn from those ideas. But all the startups are doing revolutionizing the technology part of what banks are doing. That, correct me if I'm wrong, you guys are more bankers than me, but it's the tip of an iceberg, what you see as a hard part of it. And what startups don't see is the giant iceberg under the whole thing, and that's policy making, regulations, lobbying, and whatever you want to do as a startup. I have never heard of, just please show me one startup that is doing lobbying for banking system or for financial sector. Yeah, but look at the size of what they do, That's one thing that if you want to compare them, JP Morgan, Morgan Stanley, BNP Paribas, look at the size of these companies and the lobbying that they do for the financial service, if they would have stopped doing it, all the fintech is going to die. So we have to appreciate it as much as we have to also try to challenge them. Because this is the whole story of they putting the shark into the fish pot, you know? Just make the fish just run faster, just to make them fresh. But don't just keep them there, just eat all of them, because we don't like banks anymore. So.
Okay, so I think we can move to the next question. And it will be direct mostly to Mariusz, because it's about PSD2. And does PSD2 directive will have some impact on the Big Five decision? If so, for what reason?
Maybe mostly to me, but let's start with me. Okay. I've already started in my presentation. There will be opportunities. There will be opportunities to do a platform banking, especially for the giants, especially for the let's say big retailers and so on. There will be, I believe, there will be a situation that Amazon will be gathering data from all your accounts and be serving you with payments, let's say, right? It's no coincidence that IKEA decided to sell their furniture through Amazon, right? So this Amazon might be a prime platform for retail in the future. If they manage to convince the customers to bring their data to themselves, that will be prime banking solution. And banks will still be there as a supplier of infrastructure and risk management, because I really don't believe that they would like to venture into this boring, hard banking stuff. So, yeah.
Yeah, we can see what's going to happen. As we probably know, Polish banks, they are working on Polish API, so-called standard for plug-and-play solutions for the external guys that would easily do that. I don't think the fat guys, they would do that by themselves. Again, maybe with some little help of the local players. We'll see. Again, I think even the Polish market is too small for the fat guys to get interested in. And just one more impression about the trust from the previous question. Trust should be considered based on the amount of money we are talking about. The consumers would trust Apple or Android in if we talk about 100 zloty, euro, and so on. But what about mortgage and stuff? Nothing like that. So it's not so easy that people trust Apple or Google more than the standard banks.
And coming back to Mariusz's presentation, I made a picture especially for this occasion. So let's reverse the question. Will the big five tech giants take over financial services? Mariusz said everyday bank will build partnership ecosystem, offer non-financial services with added value, external channels, and scale value propositions. So generally, maybe those tech giants should also be afraid of the revenue stream, because banks opening for external data, for working with fintechs, startups, and other companies, they could offer value-added services that are comparable to what Facebook or Google would like to do. So we also have a chance to compete with them on different areas.
If you are talking about building this new ecosystem, financial or payment-based ecosystem, or even a new paradigm, I wouldn't limit it to PSD2. Because of course PSD2 is a trigger, but there are some points. One is industry-based and another is geography-based. Of course, if we are looking at all over the world and other territories, there is a lot of new innovations regarding financial services, financial markets, fintech, and they are not related to PSD2. And again, there is not only the banks, because of course banks are obliged to do that, and there is an open banking issue, but also there is an opportunity. But this is not only banks. There are a lot of companies and other industries like insurance, like retail, like travel, like airlines can be involved in this because you can aggregate the data, the financial data, or you can initiate the payments, but of course for different purposes. So we shouldn't talk about the PSD2 only, because it's EU-based and banking-based, but we should broaden this discussion to the whole world and different industries. And maybe it's not a funny thing, but if you recall this 16 years back perspective, Sebastian, so I started the account aggregation project in 2001 at Citibank because we were trying to transfer the global MyCity solution from New York or US-based to the Polish territory. And basically it was about screen scraping, but screen scraping, as everybody knows, it's not allowed in Poland. So we founded the project group at Polish banking associations, and probably you know what happened later. So it's just the
Okay, so
remark.
we are almost out of time, so maybe there are some questions from the audience. Anybody?
I have a question, because when I was listening to you, I saw some pattern. You say that history repeats itself. And 15 years ago, we had very self-confident telco players with huge margins, telling that, okay, no one will enter our market. We have two competitive advantages, client base and infrastructure. The next 15 years, the value created, value capture within internet industry was, 99% of value capture went to Google and new, startup players. And now what I see is we have banks. You say that, okay, we have client bases and we have trust infrastructure. And what we can see is that trust is being disrupted by blockchain. And okay, so most of banks just tell, okay, it won't happen. Startups will not enter this market. We are very strong. But I'm just curious if do you have a strategy to protect your business model, or you just think that your markets will not be entered by new players?
So it's a huge simplification what we said due to lack of time. We are not defending, we are trying to adapt, because we learned our lesson from previous disasters, and we don't want to, if you are defensive, you are already dead. We are working with startups. We have the first Polish banking startup present here and doing great. So I think we learned the lesson. We are not neglecting that there will be some movement. We just don't afraid that it will kill us. We will take the wave and go with it. We are not competing with startups and fintech and new technology. We just cannot develop it ourselves. So we need to cooperate with existing players. The same problem with big tech 5. They won't be able to deliver a new tech in such a fast pace as fintechs and startups, and fintech and startups will work with everybody. So this is the main answer, I think. Mariusz?
It's quite well said, because thank you for mentioning the banking startup we are. We are adapting, and we have, if the question is about strategy, yes we do. So we are already changing. We are delivering. If you don't know, the Polish banks are one of the most technologically advanced in the world. So on the one hand, you may say there is little space to innovate, but still we expect changes. We expect changes, and we are leading it. Because it's the banks that introduced BLIK. It's the banks that made one of the most innovative solutions that the Western counterparts can really be envy of. So yes, we are changing, and we'll be expecting to cooperate with startups and combining the forces. So we'll be both winning, and we'll be. I believe it's not a question of losing the cake altogether. It will be just a split of the cake.
And just maybe one quick question from the audience. We have just a little bit of time. Anybody has a question?
Maybe the best way to survive for the banks to acquire promising startups.
like one of the ways.
No, that's gonna kill the startups. I could give you, a number of examples from my headquarters. They're in Switzerland. If the guys buy anything, that's gonna be killed in 2 or 3 years. That's gonna, stop to be, that's gonna be like a piece of concrete. If you put something that is really interesting, and if you put something that is really that's really moving fast and adapting fast into a static environment, that's going to kill it.
You are ruining someone's dreams.
Just a short comment. I think this is something that banks are facing as a challenge, changing their culture. Not changing services, but changing the culture. And the banks, in some sense, are doing it. There are examples in Poland, especially like PKO in Zenpark. They invested in Zenpark and they still keep it as a separate company. And if it stays like that, it will be alive, right? It's the only chance for the time being. But in the future, I can see the banks change so much that the culture inside the bank will allow to acquire a different cultural approach from outside.
So I'll just add two comments. So first of all, having used banks in 9 countries, I do think Polish bank is one of the most innovative banking sector. Absolutely, love that support, and I also agree with the culture part. It's not the intention of I've worked with banks and they have the intention. It's just the main problem is people working in banks are driven by keeping their jobs. They are not in the best interest of what is actually going to happen. Their interest is how can I keep my job. That makes it less risk averse. That's why they're risk averse. Because if they want to do something new, they will lose a job. Startups don't care about that. I mean, they have to survive. That's why they're very innovative. So that's the only reason I think that banks and startups cannot work together or might not be able to unless the banks change their culture. Absolutely agreed.
Okay, so I think we should end this discussion. Thank you all for being part of the discussion. Have a great day. Thank you.